Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of Etsy Inc. So let's just get started. First of all, Etsy is an online marketplace that sells crafts, a lot of things that sellers just go and sell what they make. They also sell digital goods. So, yeah, that's the overview of Etsy. A lot of people have used it or have sold in it. Let me know if you haven't. Let me know what your experience was like in the comments. Actually, that's very interesting. Generally, what they are saying is that the gross amount of goods sold in this last quarter, quarter three of 2024, was 2.9 billion, which is down on a year-over-year basis. The consolidated revenue is 662 million, which is up 4.1%. And then EBITDA is a nice chunky number over there, a 27.7% margin for the adjusted number. Now, they want better customer experiences for 2024. So they're saying that they want to give you a loyalty program. They want to make it a gifting destination for you. So instead of me going to Amazon, to eBay to shop online for other people, I go to Etsy and I'm rewarded for it, of course. Then the shipping estimates are getting better. The search results are getting better as well. So that's cool. It seems like they are making just the customer experience in general a little better, and hopefully that retains sales, because sometimes with Etsy the problem can be that I'm looking at one specific seller, maybe I buy from them a couple times, but I have no reason to keep coming back because it's not an everything marketplace the way Amazon is, for example, right? And I do think they struggle with that problem overall. We're going to see the numbers of customers later, but in general, they are rebuilding the app. They're driving more users to download it through the Etsy website as well, because apparently mobile sales convert way more. So that's just something that they're doing. They also have been making it like a gift idea catalog. So that's especially important in the holiday season where it's like gifts, 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 gifts. So that's important. They also launched a physical gift card. I'm surprised they didn't have it, honestly. It's just something that's kind of appalling. Now, when you go to Target or 7-Eleven or wherever, you will see an Etsy gift card, which is great. That's a good start. And then Q3 24 consolidated results. As we said, we saw some of these numbers, and the overall trend is that they do amazingly on the fourth quarters and then drop a little bit and then do amazingly again on the fourth quarters. Obviously, the holidays, of course. But yeah, so they have a small growth here and there, but it's pretty sustained overall. They are basically going to increase marketing. And this is something that we have to look at, because if you want to invest in Etsy, you care if their expenses are going up. And this is an expense going up, of course, but it may be worth it, maybe. So they're talking here about macro events that haven't helped them. So they're saying they have some headwinds, such as, for example, general elections in the UK and France, events tied to US politics, major sporting events, Hurricane Helene. Honestly, this seems like an excuse to me. If you're telling me that elections are driving some volatility, I mean, I believe it to a certain extent, right? But such a sustained level here, and you're saying, it's so many headwinds, so many different events. I get it. Nothing is ever going perfect, but still, you have to find a way to sustain that growth that you saw in 2021 and 2022 after the global pandemic. So, they do have, fortunately, a capital light business model. What does that mean? That from their revenues, they can turn a lot of that into free cash flow. So 204 million free cash flow in quarter three. That's quite a lot of money. That's the actual cash money that they have to then do things such as repurchase shares, issue a dividend, reinvest and grow, make an acquisition, for example. So that's very important. And it seems like their free cash flow is just very, very solid. Their cash balance is pretty nice, although it's not net cash. They do have net debt. And if you look at the active buyers here, that's where we see the numbers stagnating in the US and growing internationally. So maybe that's where the future is too, a little more internationally. But yeah, in the US, their growth has been tough. That's why they're increasing marketing expenditures. That's why they're trying to do loyalty programs to just retain those users and try to find new ones. New buyers are down significantly. This number is pretty hard. Reactivated buyers is going up slightly. I wouldn't be surprised if this trend just keeps going, right? With the loyalty program, well, yeah, you'll have more reactivated buyers, but new buyers, it's tough. I mean, the value proposition is tough when you have so much freaking competition everywhere. So it's important to note that Etsy is just somewhere where you aren't just the only dog in town. There's other websites, there are other e-commerce marketplaces where you can buy things comparably. Also, where are the sellers? I mean, I've I looked into the investor presentation and I think they mentioned the sellers just a single time, which is crazy. They're talking about the customers, the customers, the customers. They're talking about shareholders here and there with buybacks. Where are the sellers exactly? They're never talking about how they're gonna attract more sellers or make it like the top marketplace for sellers to list their items in because it's not like that's their only option nowadays. Nowadays, there's websites like Gumroad, for example, where they can do similar things. So why are they not mentioning them? That's interesting to me, and it kind of is a little worrisome because not all the stakeholders are being mentioned or maybe even cared for in extension. Now we're going to look more at the financial nitty-gritty. Here you see the growth rates of Etsy. I mean, they were astronomical for a while here in the 30% of revenue, and now it's slowed down. So it's a story of a stock that was a huge growth stock. There was some euphoria around it, and now growth has slowed down. The musical chairs game is stopping a little bit. However, they have managed to improve those margins, keeping them at around 70% for gross margin, operating margin floundering a little bit, but still very positive in the double digits. Same for ROIC, return on invested capital, seems to be doing okay. And the only thing I want to bring up is that we talked about free cash flow, how in general they seem to have a pretty good position in terms of free cash flow around the $600 million level. However, their stock based compensation is actually considered a part of this free cash flow and it's going up significantly. In reality, this is not free cash flow. That's not cash that goes to them. This is an expense. So if you actually net out the stock-based compensation, free cash flow is a lot lower, and it's concerning that they're increasing stock-based compensation by so much. Why? Because of multiple things. I mean, first of all, having less free cash flow is never great, but also because it kind of hides the truth going on here, you know? And it also is a trend that you see with many tech companies, unfortunately, or with many e-commerce companies where they have astronomical free cash flow numbers, but some of them are include a lot of stock-based compensation. And it's hard to get rid of this because employees also get mad if you take away the stock rewards programs that you have. Recognizably so. It's not that they don't deserve to be compensated, but you have to understand if you do this a lot, then you're actually eroding the free cash flow that you have because you have to pay out the employees eventually in stock, and that dilutes the common shareholders such as you and me. So, with all that said, I'm going to take the updated free cash flow numbers that are more around that $400 million mark annually. Now, I'm going to say that from there on, it's basically going to grow at around 3-ish percent. I'm taking some numbers from Yahoo Finance and then just kind of extrapolating from there. And my perpetual growth rate is 3% for Etsy. My fair value is 11%. So I want an 11% rate of return, giving me back 11% per year. That's 1% per year more than the market on average, and it compounds to be quite a lot. I'm going to divide that by the total number of shares out, and the fair value of equity would be $45.72. However, because there's $1.3 billion of net debt, we're going to subtract that from the total value, and that's going to give us divided by the total number of shares, a value of $33.78 post debt. That's the fair value that I get in my model compared to Etsy right now, which is trading at $54.86 around there for a PE of almost 30, a market cap of 6.22 billion. And as you see, there was this exuberance around here with the astronomical growth rates. I mean, we saw that number that was like 100% growth rate from 2020 to 2021 or so. And I think anyone could have told that, they can't grow like that forever. It was trading like it would. And then from there on, it's just cratered all the way down. And I mean, comparing this to this, I mean, I wouldn't be surprised if they do slightly better than my expectations. I'm basically forecasting a 3% perpetual growth rate, maybe a 5% jump over here from 2025 to 2026. I wouldn't be surprised if they can withhold or withstand those 10% for a little longer. But that doesn't actually mean that it's a safe investment, you know? And I'm just not convinced because there's almost zero mention of the sellers in Etsy's investor materials, which it's not like Etsy has no competitors and nowhere where the sellers wouldn't go. So Gumroad, eBay, even just making your own website is enough of competition that the top quality sellers on Etsy could just up and go if they're not taking care of them. They have share buybacks, those are great, but stock-based compensation being this high keeps free cash flow lower than it actually looks. And if I wasn't using the numbers with stock-based compensation accounted for it, it would probably look like a great deal, but unfortunately, it's just not. Plus, tempered growth expectations means that our valuation model should be somewhat conservative, and under those assumptions, it's just not a great deal for me. Now, I want to quote Phil Fisher's Common Stocks and Uncommon Profits, and that's he talks about the Scuttlebutt method. He gives you 15 points to do research in. One of them is actually, does the company have outstanding labor and personnel relations? So that means both the employees and also the stakeholders that they deal with. So which stakeholders are cared for? Well, how is the company's turnover? What is the wage structure like? That's where you have to look at, are they treating the sellers fairly? Are they treating their staff fairly? And if so, if so, that's important, but if not, well, how would it affect the bottom line? I mean, they can very much suffer from their top quality sellers moving to Gumroad or making their own websites. So it's important to me to stress that Etsy looks like it doesn't have a lot of competition, but in reality, it does, even from just common marketplaces and from just going to a farmer's market, for example. So it seems like a great deal. Sometimes these stocks that seem like a great deal because they've gone down a bunch just aren't that great of a deal. I think this is an example of it. But, if you have a higher risk tolerance, you could get some money back from this, of course, if there's exuberance again. But I'm not here to count on periods of exuberance. I'm here to count on the logic of my models, and hopefully that pays off. So I hope this was very helpful. I sort of try to just be a little more free flowing in this video. So I hope you like that format a little more. If you want me to analyze more stocks, please, please, please comment down below. Let me know what I should take a look at. And if I like it, I'll do a video. And with that said, please like and subscribe and have a great rest of your day.